Good morning, students. Welcome back. So today we will continue with this borrowing cost. We'll just practice some questions around the borrowing cost and then we'll move on to the next topic. Okay. So let's do a quick recap of the borrowing cost. Now, in terms of borrowing cost, some of the things that we covered last time. So I'll just share the document first of all. All right. So now when we talk about borrowing cost, there were few examples, there were few elements of the borrowing cost we discussed as to what will comprise of the borrowing cost. So any cost which is pertaining to the borrowing, that's what you call as borrowing cost. And we discussed that it's not limited to interest, though interest is a significant portion of this and very commonly you will find that portion, but you may also have some other components as well in the borrowing cost, right? Now, in terms of those other components, now what could be those components? We may say any premium discount which could be there. Plus, we may also say that any exchange difference at times may also be considered as a borrowing cost. Yeah, those are some of the exceptional situations we talked about. Okay. Further, in relation to the borrowing cost, we understood the accounting treatment. So quickly, if you can just also help me understand with the points in relation to the borrowing cost. What was the other point? Other point was around the borrowing cost in terms of its accounting treatment. So where do you take it? Can you tell me quickly? So what is the accounting treatment of the borrowing cost? So where do you take it? Over to you quickly. So where do you take the borrowing cost? What is the accounting treatment? Everyone? Yes, quickly please. So when it comes to the borrowing cost, what is the accounting treatment? Where do you record this? Quickly. Great. Emin says it goes to P&L, right? So every time this has to go to P&L. But there is one exception we talked about. Can you tell me what is that exception? In which case borrowing cost doesn't go to P&L. Instead, it is capitalized, right? Very good. So Anil says either we capitalize or transfer to P&L. No, it's not about either. It will always go to P&L except in one case. And what is that? In relation to a qualifying asset, not otherwise. Okay. Because otherwise it will always go to P&L except for qualifying asset, right? Now, in relation to qualifying asset as well, we discussed that how do you start the capitalization in when do you start the capitalization? Is there any period for which you will not be capitalizing the interest? And eventually, what is the date? What is the cutoff when this comes to an end? Okay, so I think we have this in front of you on the screen right now in terms of the capitalization. So when do you start it? That's the later of these three dates. When the borrowing cost is being incurred, or maybe the construction work has started, or you can say the active development on the construction has started, right? So later of these three. In terms of suspension, if let's suppose active development is interrupted and that's something abnormal in nature, that's when you will not capitalize. It's a kind of suspension, correct? And then once the asset is ready for use, or you can say the borrowing cost is not incurred, whichever is earlier, that's when you will say it will be seized, right? Yeah. So that's how you'll have to look into it, correct? Now, as far as the accounting treatment is concerned, it's very simple. Why? Because once you compute the total interest, or you can say the total borrowing cost, what do you need to compute? The amount which is required to be capitalized. So if you can do that, it becomes very simple. Why? Because from the total interest, you can just reduce the amount to be capitalized. Amount means amount of interest. So the balance amount is something which you take to P&L. Okay, so that's how you'll have to compute the amounts every time. Correct? Yeah. So now, basis some of these points, we will look into some more examples today. Okay, I'm just hoping you have done a revision of this. Anyways, we have done this quick recap. Hopefully this should help you. And moving further on to some of the questions, right? Now let's look at this question number 3. Okay, so if you want, you can also refer this, okay, in the study material, please. Now moving on to this next question. Company has obtained institutional term loan of 580 lakhs for modernization and renovation of its plant and machinery. Okay. Plant and machinery acquired under the modernization scheme and the installation got completed on 31st March X2 amounting to 406 lakhs. 58 lakhs has been advanced to suppliers for additional assets, and the balance loan of 116 lakhs has been utilized for working capital purposes. Now, accountant is in a dilemma as to how to account for total interest of 52.2 lakhs incurred during this year, X1, X2, in respect of this entire loan amount. So what do you think? What should be the accounting treatment? Quickly, over to you. Yes. In this case, what should be the accounting treatment? Can you just quickly solve this and help me? What will be the accounting treatment with numbers? Over to you. What will be the accounting treatment? Yes, Dhanlakshmi, I think you want to discuss this. Very good. Please go ahead. Yes, Dhanlakshmi, please go ahead. Please speak up. Yes, Dhanlakshmi, please go ahead. Please speak up. Please unmute yourself. Yeah, Dhanlakshmi, please go ahead. I think you want to speak. Yes, Dhanlakshmi, I think you want to speak. IT, can you please unmute Dhanlakshmi? IT, please unmute Dhanlakshmi.
Good morning, sir.
Good morning.
Sir, in this 406, which is the installation, plant and machinery is a qualifying asset, sir. So we
Okay.
can take 406 divided by 508, which is the loan amount, into 52.20, sir.
Okay.
So that we will get interest for the qualifying asset.
Right. So if you can just tell me the numbers, the amount that you capitalize, the amount you take to P&L.
That is 1 minute, sir. 406 divided by 580.
Right.
Into 52.20, which comes to 36.54.
Okay.
So that is the capital that we will add it to the cost of 406.
So you mean to say that's the amount you will capitalize, is
Yes,
it?
that interest amount that I will take it. Then additional amount which I gave it means which is given for the advance as a
Right,
advance. That
right.
also we will take it in the same manner. The calculation will be the same, like
Okay,
58 divided by 508 into
right.
52.50.
Correct.
So we will get 5.9596
Hmm.
if we round it off. So
Right,
that also we will take it as a qualifying asset. The
right.
rest 116 is then also that is not utilized for the qualifying asset. It is a working capital used for the working capital. So we will not consider as a qualifying asset. And that
Yes,
interest, the difference of that, or the same way we can calculate, and we don't take it that as capitalization, and we take it to
right.
the profit and loss.
Good, very good. Now, in this case, I think what we need to identify to begin with is what is the
Whether
amount
this
which is, sorry, yes, please go ahead.
is, sorry, sir, you can.
Okay, yeah. So I was just saying that in this case, the amount that you need to identify is in respect of what is being spent for qualifying asset and what is not spent for qualifying asset. Okay, I think that's the first part, because accordingly you will decide what amount you will capitalize, what amount you will not capitalize. Correct. Now, in this case, if you look at this 116 lakhs, which is used for working capital purpose, is it a qualifying asset? Answer is no. Yeah. So that's why this amount pertains to non-qualifying asset. The remaining amount pertains to qualifying asset. Why? Because if you talk about modernization, renovation of machine, if you talk about advances given to suppliers for additional assets, all of these are nothing but the qualifying asset. Correct. But the total interest is already computed for us. Can we compute the amounts for these sort of expenditures? No, because rate of interest is not given to us. So that's why, how can you compute the interest? On a proportionate basis, right? On a proportionate basis. So that's why we can say that 52 is the total interest. Okay. So this is the total interest. Now the proportionate amount for working capital will be what? So this is the proportionate amount for working capital, 10.44 lakhs. So that means out of this total, 10.44 belongs to non-qualifying asset, which will go to P&L, right? So that will go to P&L. The remaining amount has to be capitalized. But here again, we have a problem. We can't just simply say that remaining entire amount you will capitalize, because we need to identify the asset to which it belongs to. So that's why you'll have to again split it into two parts. The one which goes to plant and machinery, the other one which goes towards additional assets. Okay, so there again you will apply the similar approach. You will compute that on a proportionate basis, for which all the amounts are given to us. Okay, yeah. So all the amounts are given to us. So it's clearly specified. What is the amount towards renovation of plant and machinery? What is the amount towards supplies for additional assets? Right? Clear? Everyone clear on this? Any questions? Any doubts if you have? Yes? Clear? Any questions? All right. So now let's look at one more. Okay, let's look at this next question, question number 4. Take Limited has borrowed 30 lakhs from SBI during the financial year X1, X2. So this is the amount of borrowing. These were used to invest in shares of Give Limited. Give Limited is a subsidiary of Take Limited, which is implementing a new project estimated to cost 50 lakhs. As on 31st March X2, since the SAD project was not complete, directors of Take Limited resolved to capitalize the interest accruing on borrowings amounting to 4 lakhs and add it to the cost of investments. Okay, so this is what the directors are trying to do. Okay, in this case, what do you think should be the accounting treatment? Any thoughts? Over to you. Yes, anyone? Okay, yes, I think Sridhar has raised hand. Yes, Sridhar, please go ahead. Then Lakshmi says purchase of shares is not a qualifying asset. Okay, so what do you do in that case? Sridhar, I think you raised hand. You want to speak? You want to discuss this? What about others? What do you do? What should be the accounting treatment? Quickly, everyone. What should be the accounting treatment in this case? Yes, anyone? How would you deal with this? What will be the accounting treatment? Quickly. Okay, so then Lakshmi also says it goes to P&L. Sridhar says it goes to P&L. All right, so let's look at this, right? Let's look at this. See, in the given example, what do we have? We have this loan which is borrowed from the bank by the company, and this is invested in the shares of another company. Okay, now there is an investment done for which there's an accounting standard you apply, AS30. Now what does it require? It requires the cost of investment to be evaluated. Now what does that include? See, the cost of investment includes acquisition charges such as brokerage fees and duties. So if we look at Take Limited, which used borrowed funds for purchasing the shares of the company, okay, rupees 4 lakh interest payable by Take Limited means the investor. Can you call it as the cost which you can just capitalize with the cost of the investment? And that's what you need to decide. Yes or no? And how do you decide that? On the basis of what is a qualifying asset, what is not a qualifying asset. So this investment in shares, now the question arises, is it a qualifying asset? Tell me, what do you think? So we discussed that qualifying asset is an asset which takes substantial period of time to get completed. Yes or no? Yeah. So in this case, when the shares of a company are acquired, so do we have anything in terms of its process wherein it will get completed? No, the moment you purchase the shares, those are there. There's nothing for you to construct, to manufacture, to get this ready. It's already ready the way it's required to be. Yes or no? So can you say that this is a qualifying asset? No, this is no doubt an asset. But is it a qualifying asset? Answer is no. So therefore, can this interest be capitalized with the cost of investment in the shares of the subsidiary company? Answer is no. Okay. So therefore, if you look at the thought process of the directors, now what is the thought process of the director? They want to capitalize this interest. Can that be done? No, that cannot be done. That will be the wrong accounting treatment. So where will you take this? This will go to P&L straight away. Clear? Clear on this? Yeah. I think again it's quite straightforward. This goes to P&L. Why? Because it's not a qualifying asset. Right? All right. So I think with this we are through in relation to borrowing costs. Borrowing cost is a small accounting standard, a simple one, not very complex. I can see this query from Anil. Anil has a query. Yes, Anil. What is your query? Can you please explain? What is your confusion? Please pick up. Please unmute. Please pick up. Anil, quickly. Yes. Please pick up.
Sir, I'm confused about that 4 lakh rupees. Like, we should. Uh, Hello, I'm audible, sir.
Yes. Yeah, you are audible. Please pick up. Please explain. What is the confusion? So you're saying I am confused. So what is the meaning of I am confused? What do you mean by that? What is your
Like,
confusion?
they have borrowed 30 lakh rupees, right?
Right.
From State Bank of India, and they have invested all 30 lakhs in its subsidiary company,
Correct.
Give Limited, and the accrued interest is 4 lakh.
Correct.
And we should capitalize that 4 lakh, right, sir?
No, what is your confusion? Are you saying that as per your understanding, it should be capitalized and we are saying it should not be capitalized?
Yes,
Anil,
sir. Like,
is
I'm
that
a
the
bit
case?
confused, like, what's the treatment for that?
Okay, very good.
Yes,
So tell me
no,
one
sir,
thing.
like,
No worries.
I
Tell
don't
me
know the
one thing,
treatment.
Anil. Anil, can you hear me?
Yes, sir.
Anil, okay, very good. So tell me, if you invest in shares of a company, is that an asset? Tell me. If the
No,
company
sir.
Take
No,
Limited
sir,
has
like,
invested,
it
no, it's not
takes
an asset.
intended period to be a qualifying. Yes, sir. I
No,
agree.
my question up. I think you are not able to
Okay.
listen to my question. My question is very simple. Let me just repeat the question. I am sharing the screen. Just give me a minute. Let's suppose Take Limited has invested in shares of a company. Okay. There is an investment which Take Limited has done in the shares of Give Limited, amounting to anything. So will you call this investment as an asset or not? That's my first question, Adil. Tell me.
No, sir, it's just an investment,
So
not an
investment
asset,
is not
sir,
an
just
asset.
an investment.
So is investment not an asset?
Yes, it's an asset, will show in the balance sheet
So that's my
as an
question.
asset.
Will you call this as an asset or not? That's my question, Adil.
Yes, sir.
It's an asset.
We'll
Okay.
call it as an asset.
Okay. Now my next question is, as regards this asset, we need to find out whether this asset is a qualifying asset or not. Okay, what is the next thing? if there is an asset, what do you need to check? Whether it is a qualifying asset or not. Now tell me, will this investment qualify as a qualifying asset? Can we say investment is a
No, sir,
qualifying?
because it is not intended, not taking more than 12 months to get ready. I think
Okay,
it
so you
is,
are saying it's not a
uh,
qualifying asset, correct? If you
yes,
do not
sir.
have a qualifying asset, can you capitalize interest?
No, sir.
No. So where do you take the interest in such a case?
Will simply transfer to P&L.
P and L. So that's what we have done in this example. Understood? Understood? Clear?
Thank you, sir. Yes, sir.
Sure.
Yeah, sir.
Sure. Anyone else? Any more questions if you have? Any questions, any doubts if you have, please let me know. Then we will move on to our next topic.
Sir, I have a
Yes.
question. Suppose in this illustration number fourth, we
Yes.
taken as the this cost which we borrowed from this SBI 30 lakh. It is more than the 1 year, so then it will be called as qualifying asset, sir.
No, how is that possible? You tell me. So if let's suppose you acquire shares of a company, why will it take you more than 1 year? You go buy the shares. So let's be
Yes.
practical also. Huh? So there is one theory, which is fine. But practically, do you think it's possible?
First
Why
of
will
all,
you
we
take more than
calculate.
1 year to acquire the shares? You go and purchase. So the purchase is taking immediately,
Yes.
isn't it?
Yes, sir. Yes.
Okay, so the situation you are discussing is not possible.
Still, it
Understood?
is more than 12 year even.
Sorry?
Still, it is more than 12 months.
Still, it is more than 12 months. What do you mean by that?
I mean that key, sir, substantial time to required to the as a called as qualifying asset, right, sir?
Yeah, so that's the general definition. Huh? But in the given case, that criteria doesn't apply.
Okay, it means we require to check the nature of that investment, and first of
See,
all, it
it's
is
very
qualifying
simple.
asset.
Huh? So, like I just mentioned this. First of all, what do you check? Whether it's an asset or not, and
Yes.
whether it's a qualifying asset or not. So, is it a qualifying asset? You tell me.
No, sir, it is not a
No. The
qualifying
moment
asset.
you say it's not a qualifying asset, what is the accounting treatment?
So it is entire cost which we accrued on that. So it is goes to the P&L, sir.
No, so forget about it. So, what is the accounting treatment of interest, which I have told you, which will always be the case?
We not capitalized, sir, in these
It will
assets.
always go to P&L, correct?
Yes, sir.
Yeah.
Yes.
So, the moment you say it's not a qualifying asset, forget about anything. There's nothing you need to consider. Simply you go to P&L straight away because
Yes.
only qualifying asset is an exception. Otherwise, interest has to go to P&L.
Right, sir. Right.
Understood? So let's keep it very
Understood.
simple. It has to go to P&L always, except in one situation. What is that? Qualifying asset.
Qualifying
So
assets.
that's how you need to look at it. Okay. Otherwise, you will stay confused. Okay, it's not a qualifying asset. Do we have any other situation? What are those situations? There's nothing. Why are you even thinking about it?
Okay, sir. Just I
Understood?
understood, sir.
Sure. Anyone else? Any questions? No? All right. So then I think we can move on to the next topic. Next one is about leases. So the next topic we will pick up is leases, right? Okay, so Virashri has a query. Yes, Virashri, please go ahead.
Sir, I have a small doubt. In that abnormal period, you said that interest won't be capitalized. So
Right.
after that period is over, will it be accrued and capitalized later, or it won't even be capitalized during the
What
abnormal
do you
period?
mean by that? After that, it will be capitalized or not?
Once that period got over, will it be
Hmm.
capitalized later, or
Later for that period.
yes, sir?
So if let's suppose you are doing that later, then what is the purpose of not capitalizing it earlier?
Since we had that abnormal situation at that time, we are not capitalizing at that time. Then once it gets normal, we are capitalizing it.
No, but once you are moving into that situation wherein the period is normalized, but the period which was abnormal, will that change now? Let's think about it. Huh? See, every time you get confused, let's think about some of the practical aspects. Let's suppose you started your capitalization on 15th of March 2026. Okay.
Okay, sir.
Let's suppose for the month of May and June 2026, there is some abnormality due to which there's a suspension of active development, right? Of course, this will come to an end at some point of time. Abnormality will not remain permanently, isn't it?
Yes, sir.
Now, let's suppose July onwards, you believe no, it has become normal. Okay, so someday, sometime abnormality will go away.
Yes,
Now,
sir.
what are you trying to say? You are trying to say that can I capitalize the interest for these 2 months in the month of July? Now,
Yes.
how does it really matter? Whether you capitalize that in May or June or July, does it matter? No. Why? Because you are capitalizing it then. What is our objective? Our objective is that for this period, capitalization should not be done. We are not saying that you will not do in the month of May. We are saying you will not do for the month of May.
Okay. Okay,
Isn't
sir.
it? That's what we discussed. Yeah.
Yes.
So let's try to be logical in terms of the suspension. So every time, let's suppose you are sitting in the exam. Okay, you come across any question. So if you get confused, just think about it. That if let's suppose I'm not doing in May, if I'm doing in July, then what's the point of this provision which is there in the accounting standard? Accounting standard doesn't require that you pass the accounting entry on the same day. You may pass the accounting entry anytime during the financial year. Does it matter? No. Why? Because your financial statements have to reflect a true and fair view. The accounting has to be done. Yes or no?
Yes, sir.
Understood. Now clear on this?
Yes, sir. Got it, sir.
Sure. Okay. Anyone else? Anyone else? No? Everyone clear on this? Yeah? Everyone clear on this now? All right. So,
Sir, I have a small doubt, sir. Like
yes.
in the page number 5.127, there is one point is given reference. The students are advised to refer the full text of Accounting Standard 16 borrowing cost
Okay.
and issue 2000. Should we refer
Right.
anything apart from this text, sir?
See, that's the purpose of your detailed understanding. Now, all of these are accounting standards, right? So currently what you are doing is you are not reading the bare accounting standard. You understand bare law,
Yes, sir.
right? So this is not the bare accounting standard. So if let's suppose you want to understand the accounting standard, the way it's written in totality, each and every aspect around it. So that's why every time you read something, what is advised that please go and refer the bare. So that's how you'll also be able to relate to that. So
Oh,
something that you are covering in the book is nothing but a part of accounting standard, but you can always go and refer that. So for the purposes of references, it is given. So if you
okay.
want to refer, you can do that. If you don't want to refer, you don't do that. You don't miss out on anything if you don't do that. So don't
Okay.
worry around it. Okay.
Okay, okay, sir. Thank
So if your concern is that am I missing out? Answer is no.
you. Okay, sir.
Okay, that's the purposes of the purpose is your knowledge. So at times you may want to enhance your knowledge by going to the bare. So that's the whole aspect.
Okay, thank you, sir.
Clear? Okay, anyone else? No? All right, so now we can move on to the next topic. Leases. AS 19. This topic is about leases. Lease, you can say, is a kind of arrangement or a contract between two parties. So we'll discuss what is a lease. Certain types of leases are also required to be looked at, because when you go to the accounting treatment of leases, that will be dependent on the type of lease. Okay. Now, what are those types of lease? All of those aspects we will cover. Now, when it comes to a lease, or when it comes to the accounting treatment of a lease, you can say these are slightly different. Okay, lease is a specific kind of arrangement that you generally come across, right? Now, in this case, let's first of all understand what is a lease and some of the terminology around the lease. Means the lease term, then we also have some lease payments, and then we have some aspects related to the lessee, to the lessor, right? Some of those things we will try to discuss. Once we have that clarity, that's when we'll move on to the accounting treatment. Okay. So now what I'll do is I'll just first of all get on to those basic aspects related to the lease. So let's understand about a lease arrangement to begin with. Just give me a minute. So let's suppose there are two parties, A Limited and you have this another company, B Limited. A owns a car. Okay, I'm talking about a car. Who's the owner of this car? A Limited. B wants to use this car, right? So that's why what A and B can do is they can enter into a contract. And what is going to be the arrangement of the contract? That B will give the car, sorry, A will give the car to B Limited for use. Okay, so what B will get is B will get the right to use this car as per the terms of the arrangement. And in return for that, what will B do? B will pay the consideration. Yes or no? So it could be a single payment or a series of payments. Means annual payment can be done, monthly payment can be done, quarterly payment can be done. Right? Now, generally, what will they do? Generally, they will keep a period. Let's suppose they have kept a period of, say, 5 years. Right? So this is the period. So they are saying that for a period of 5 years, A will give the car to B for usage. Now, in this case, can we say that the ownership of the car gets transferred to B? No. Ownership doesn't get transferred to B. A continues to remain owner of the car. Even after 5 years, who will be the owner? A will be the owner. So nowhere are we talking about transfer of ownership. Because if you do that, what will happen? It will become a sale transaction. So we are not talking about sale. Okay? We are not talking about sale. We are only talking about an arrangement wherein the right to use is given to be limited. You may be thinking, is it not a rental arrangement? Answer is yes. It's nothing but a rental arrangement. Okay? And this is what you call as a lease arrangement. Understood what is a lease? So this is what you call as a lease arrangement. So an arrangement like this becomes a lease arrangement. Right? Now, in case of this lease arrangement that we just discussed, there are few terms. This party A Limited. Can you tell me what do you call this party as? In the given situation, what do you call A Limited? Tell me. What do you call A Limited?
Laser, sir.
Lesser. Very good. So in this case, A Limited will be called as lesser. Right? What do you call B Limited? Great. Anil says B Limited will be called as a lessee. Right? So B Limited will be called as a, so B Limited is the lessee in the given case. Right? Next. In this arrangement, the term of the lease, there's a period of the lease, term of the lease, what is that? 5 years. That's the term of the lease. This is what you call as lease term. Understood? This is what you call as lease term. Right? In this case, there's an asset which has been given on lease by lessor to lessee. Okay. Car. So this asset, which is the part of the lease arrangement, means which is given on lease, means the underlying asset. What do you call this asset as? This is called as leased asset. Understood? This is an asset under lease. So you may call it as asset under lease, lease asset, leased asset. Right? So these are the terminologies which we are going to use at various places. So that's why these are important to understand. Another very important point. Ownership is not getting transferred, right? So it's not a sale. Next, when it comes to this payment, okay, now this payment which is made by B to A, so what will happen? Both the parties will agree. They will agree what B will pay to A. Okay, let's suppose they have decided that B will pay rupees, say 25,000 per month for using the car. Let's suppose this is what B has decided. In this case, this payment by the lessee to the lessor is called as lease payments. These are the payments towards lease. So that's why, what do you call them as? lease payments. Now, as around this lease payment, there is a terminology or there is a concept which you call as minimum lease payments. So that again we'll have to discuss further. What are those minimum lease payments? So you can just simply say what is the minimum lease payment? Means the minimum amount of lease payment which lessee is required to pay to lessor. Okay. So that's what you call as minimum lease payment, which is also very commonly called as MLP. What is MLP? Minimum lease payment. Clear? Minimum lease payment. Right? Any questions on this? Are you clear on the lease term and some of these terminologies? Any questions on this?
Sir, could be contract altered by the leaser?
What do you mean by that? Are you
Means,
talking about the modification in the lease? Is it?
yes, sir, yes.
Yeah, definitely. See, let's suppose they started with this contract. After 3 years, they want to change the contract. So what is the change? Let's suppose lessee wants to change the lease payment. He wants this payment to be decreased. Lessor, let's suppose, wants this payment to be increased. Let's suppose they want to extend this contract for another 2 years. Right? So any of the changes they may bring in, and it's not necessary that only the lessor can change. Lessee can change. Now, the changes, the modification, what are taking place, that will again be specified in the contract itself. Who can change, when they can change, do we have a lock-in, means no changes can be done before that period. All of those aspects are always specified in the contract itself, and any party can require any changes, and for our purposes modification is possible, but modification will happen in future. Okay, so when will we discuss the accounting? So this is the point when they are started. Yes or no? Let's suppose
Yes,
this is
sir.
a period of 5 years.
Lease term, 5 years.
Okay, so this is the period when they are starting, right? So when they are starting, that's when we'll have to do some assessment, which we'll discuss later on. When they
Okay.
are starting, that's when they will have to get into the details of what this lease is, whether it's a lease or not, how do you account for. I'm not saying on day zero you will do the accounting. No, that's not my point. But the assessment that we will do in most of the cases is at the inception of the lease. Inception means when you start the lease. Because we are standing as on today. So we don't know after 3 years, after 2 months, after 5 years, after 1 year, any change is going to arise. As and when change will arise, we'll talk about it. Clear?
Yes, sir, clear.
All right. Anyone else? Any more questions if you have?
So, like, how can we define minimum lease payments?
So that's a concept we will discuss. Okay. We will talk about minimum lease payment.
Okay.
What do you include? As of now, for the purposes of your understanding, you should have a clarity that what do you mean by this term minimum lease payment? Minimum lease payment means nothing but the lease payments. And why do you add the word minimum? Means that's the minimum amount which the lessee is required to pay to lessor. That's nothing but lease payment only. Okay. Now, what do you include
Okay,
in
sir. Thank you.
that? We will discuss. Right?
Okay, sir. Thank you.
Sure. Anyone else? No? Clear on this? Right? Okay, very good. So now let's move further. Okay. So let's go back to the document. So let's look at this. minimum lease payments. See, for I think Nisha has a query. Yes, Nisha, please pick up.
सर
Yes, Nisha. Yes, please go ahead.
ए टू बी टू ए जो हम लोग पैसे देते हैं पेमेंट करते हैं
Nisha, I can't hear you.
बी लिमिटेड हेलो
Yes, Nisha.
हाँ बी लिमिटेड से जो हम लोग ए लिमिटेड को पेमेंट करते हैं
Yes,
वो पेमेंट लीज पेमेंट कहलाती है।
yes.
तो ए लिमिटेड से जो बी लिमिटेड को राइट टू यूज मिलता है वो क्या कहलाता है?
Right to use only.
ओके
Okay. Okay.
थैंक यू सर।
Sure. Then I think Akhila has a query. Akhila, please, can you explain your query? What is your question here? Yes, Akhila, please explain. See, when you write down your query, the request is either you elaborate, because if you don't elaborate, it's very difficult to understand your query. Otherwise, it's better you speak up. Huh? Yes, Akhila, please go ahead. Please explain what is your query. Akhila. Okay, Sridhar is asking, lease payment is made in advance? No, it's not necessary. That will again be dependent on the terms which both the parties will have. Maybe the payment is made in advance, maybe it's monthly, means the end of every month, maybe it's end of every quarter, we don't know, and it doesn't really matter to us. Okay, Minakshi is asking, sir, rent and lease? Yes. Yeah, so this is the term that you use, that's it, right? Okay, anyone, any questions on this? Akila, do you have a question now?
Good morning, sir.
Good morning.
Sir, minimum lease payment is also known as down payment. We can say that.
What do you mean by down payment?
We are so when we take a lease, we should pay
Yes,
something, some amount for that.
right. So
So
now
we
please
can call.
understand, down payment is the term that you use when you go purchase something. Okay, so what do? You will actually be paying an initial amount. That's the term that is associated with down payment. Okay, for our purposes, any initial amount, any subsequent amount doesn't matter. What matters is what payments are made by lessee to lessor, whether it is done as an advance initially, or whether it will be done over the period of lease, or whether it will be done after the lease is over. Understood?
Okay, sir.
Any payment made by lessee to lessor, you will call as lease payment. Yes or no?
Yes, sir.
So that's what you call as lease payment. And what do you mean by minimum lease payment? That's the minimum amount which is required to be paid. That's why you call it as minimum lease payment.
Okay, sir. Thank you.
Understood?
Yes,
Understood.
Sir.
Right. All right. Anyone else? See, in the standard, I would say some of these terms are important, because as far as its accounting is concerned, all of those you will be able to appreciate better once you have the clarity on the lease arrangement. So it's good that you are trying to get into the terms and some of these concepts around the lease arrangement. Okay, next. Now I'll also add some terms here, because eventually then we are going to make use of that. There's a concept called as residual value. Do you know that? Can somebody explain the concept of residual value? In case of PPE, you must have discussed that residual value. Who will
Sir,
answer this?
can I explain, sir?
Yeah, please go ahead.
So
Very good.
residual value are those value which says that ki it is which is whichever is asset, so which is useful in which describe the useful life. So in that useful life we calculate the residual value. So whatever we name called to these called as residual value.
Okay, very good. Anyone else who would like to add to this? What is residual value? In a very simple term, we can say that's the scrap value of the asset. Yes or no? Means once the asset will be fully utilized, when the company doesn't plan to use it any further, so what do? They will dispose it off, right? So let's suppose today A Limited has asset. So it's a PPE for A Limited. After 5 years, let's suppose A Limited decides I'll sell the car. Okay, so A Limited doesn't plan to use it. So today A Limited may want to know what is going to be the scrap value. That's what you call as residual value. Means the value which will be residing. Right? That is what you call as residual value. Now, in this case, how is this term residual value relevant to us? See, sometimes what may happen is the residual value of this leased asset is guaranteed by B Limited. So what B may do is, lessee may guarantee to lessor that after 5 years, when the lease term is over, I guarantee that the residual value of this car will be at least 5% or 5%. So now again, please don't get confused. 5% is an example. So don't take it as a rule, right? Right? Sometimes this amount may not be guaranteed by lessee. That's what you call as unguaranteed residual value. So if the residual value is guaranteed by somebody, you will call it as guaranteed residual value. Otherwise, it is unguaranteed residual value. Now, how is this relevant to us? Whether it is residual value or it is guaranteed or unguaranteed, how is this relevant to us? Where do we make use of this? So let's try to understand this. Okay. Now, let's move on to this minimum lease payments. Now, what are minimum lease payments? These are the payments over the lease term which the lessee is required to make to lessor. Now, this minimum lease payment is required to be looked at from the perspective of lessee and lessor. Means, if let's suppose lessee were to compute minimum lease payment, so what will he do? Any residual value which is guaranteed by or on behalf of lessee will include that amount in minimum lease payments. So if let's suppose you get a question that compute minimum lease payments from the perspective of lessee. So what will you do? You will include residual value which is guaranteed by or on behalf of lessee in that amount. Why? Because it's a commitment from lessee to lessor. So that's why you should include that. But when it comes to lessor, what do? Any residual value which is guaranteed to the lessor by or on behalf of lessee, or maybe there is a third party who has given a guarantee for that. So from lessor's perspective, you will include that guaranteed residual value. Is it necessary that it has to be guaranteed by lessee? No. Maybe it's guaranteed by any other party. But when you look at it from the perspective of lessee, if there is a third party who has guaranteed that amount, will you be including that? Answer is no. Because lessee is not going to pay that. Right? Now, this is one aspect which you need to consider. So when we will move on to the questions, you will get more clarity as around this as to what is required to be included, what is not required to be included. Okay. Now, for the purposes of our discussion now, let's quickly touch upon these definitions. What is residual value? Residual value of leased asset is the estimated fair value of the asset at the end of lease term. What is guaranteed residual value? In the case of lessee, it's the part of residual value which is guaranteed by lessee or somebody on behalf of lessee. Okay, but if you look at it from the perspective of lessor, so as we discussed, it is something which is guaranteed to the lessor by lessee or somebody else. Correct. Now, there's also a concept called as unguaranteed residual value. See, residual value means what? Residual value means summation of two things. Whether it is guaranteed or unguaranteed, both the amounts. Because if let's suppose residual value is 100, 80 is guaranteed by somebody, 20 is not guaranteed. So residual value will remain 100. So it is necessary that it has to be guaranteed by somebody? No. No, that's the concept. Okay. If it's guaranteed, then we will call it as guaranteed. Otherwise, it's all unguaranteed. So maybe the residual value is there, it's not guaranteed by anybody. So entire amount is unguaranteed. Yes or no? Clear? Now, there's one more concept that you call as gross investment. Now, what is this gross investment? And how is this relevant? See, there are few types of leases that we are going to discuss. In those types of leases, you may have finance lease and operating lease. From that perspective, some of these additional terms, like for example, which you can see on the screen, gross investment, unearned finance income, okay, all of them become important. As of now, we are not touching upon that. We will move on to that slightly later. Okay, once we get on to the accounting treatment. As of now, what we will do is, now we will move further to understand the type of lease. Okay. Now, as per the standard, two types of leases are possible. So every time you have a lease, what will you do? You will check whether it's a finance lease or operating lease, because only these two types are possible. Now, what is a finance lease? If the risk and rewards in relation to that asset. So in our example, if you talk about that car, if let's suppose substantial risk and reward in respect of that car have been transferred to the lessee. Please remember, I am not talking about transfer of ownership. No. And it's not a sale. Substantially, all the risk and rewards have been transferred. Ownership is not transferred, title is not transferred. That's when the lease will be called as a finance lease. But if you look at the operating lease, okay, operating lease is not defined. So let's look at this. Now, leases are of two types. Finance lease and operating lease. Now, what is a finance lease? Wherein substantially all the risk and rewards are transferred. So let me write it as transfer of risks and rewards. To whom? Lessee only. Yes or no? Now, you may have a question, but sir, how do we get check? How do we get to know what is the meaning of this substantial transfer of risk and reward? That we will discuss. That part we will have to discuss, because that is the assessment we will have to do. Now, what is an operating lease? See, the definition of operating lease is very simple. Any lease which is not a finance lease. Simple. Any lease which is not a finance lease, what do you call it as? Operating lease. So that means every time we have a lease, okay, every time we have a lease transaction, what do we need to check? First of all, we need to check whether it's a finance lease or not. Okay, so every time we have a lease, what do we need to check? Whether it's a finance lease or not. If it's a finance lease, then you will do the accounting as per finance lease. If it's not a finance lease, then what will happen? You will go to operating lease by default. You don't need to check anything further. Clear? Now comes the question that the only way we can check a lease is whether it's a finance lease or not. Correct? So now, how do we check whether a lease is finance lease or not? So let's get into this assessment now of a finance lease. See, what is the underlying principle in case of a finance lease? Transfer of risk and rewards substantially. Okay. Now, what do you mean by that? How do you check whether it has taken place? How do you get on to that point? Yes or no? So that's the next point. So for this, standard gives us some indicators. Now, please understand, these are indicators which will help you decide whether there is a transfer of risk and reward substantially or not on the basis of those indicators. Okay, so you can say, if you have to do this exercise of assessment of whether a lease is a finance lease or not, how do you do that? You can take the help of those indicators. But please understand that those will be only the indicators. Means you should not think it's an exhaustive list. Means you should not think that if those indicators are not there, then the lease will never be a finance lease. What is the underlying concept you need to remember? This is the main concept: transfer of risk and reward. Okay, for checking this, indicators are available. Indicator is not the concept. Understood my point? Yeah. So you can say indicator is what? It's a kind of example given to you. That's not the underlying thing. That's not the underlying concept. This is the main thing for you to look at. So now we will talk about those indicators, and with the help of those indicators, we will check whether the lease is a finance lease or not. And hopefully then you will get a clarity of what a finance lease is. How is that required to be recorded? Now, first indicator. Ownership gets transferred. At the end of lease term. Now, once again, let me just clarify, because you may be getting confused. You may be thinking, but sir, just now we discussed ownership is never transferred, and now you're saying ownership will get transferred. And if the ownership is getting transferred along with the transfer of risk and reward, should we not be considering it as sale? No. Why? Because ownership is not getting transferred today. Let's go back to our example. Okay. So we have A Limited and B Limited. So what do? They have entered into a contract for a period of 5 years. Now, at the inception of lease, so on day one, what do? You will have to check the nature of this lease. Means whether it's a finance lease or operating lease. This checking will not be done after 1 year, after 1 month. No. You will do that when? At the inception of lease. So that means when you read the contract, lease agreement, what do you find? There's a clause in that agreement. This clause says at the end of lease term, means after 5 years, when the lease period will get over, the ownership of the car after 5 years get transferred to B Limited, lessee. Understood the point? Understood? So over a period of 5 years, who will continue to remain the owner? Lessor. After 5 years, the ownership gets transferred to B. Okay. Now, in this case, the moment you say this sort of clause is there, this is an indicator of what? That it's a finance lease. Now let's try to understand the underlying concept. See, in case of a finance lease, what are we trying to check? In case of a finance lease, we are trying to check whether the risk and rewards are transferred to lessee or not, substantially. So if you look at this given situation, what will happen? Over a period of 5 years, who will enjoy the benefits of the car? Tell me. Over a period of 5
Less.
years, lessee. After 5 years, who will become the owner and enjoy the benefits, risk and rewards of the car? Tell me, after 5 years, who will do that?
B Limited, sir.
B Limited, again lessee. So that means effectively all the risk and rewards which are attached to the car, who will have that? Lessee only. Yes or no? Even though lessee is not the owner, effectively, if you look at the risk and rewards of this car, they have been moved to B Limited. Yes or no? So that's why
Yes, sir.
you will say it's a finance lease. See, finance lease is not a sale, but you can say it's an alternative of sale. When the entity doesn't want to sell, but wants to transfer the risk and reward substantially. That's one course of action which at times they choose to adopt. Again, depending on the types of benefits they want to enjoy, types of arrangements they want to enter into. Clear on this?
Yes, sir.
Now, this is the first indicator we have talked about. Next indicator. Next indicator is called as bargain purchase option. Let me just write this briefly. Okay, and don't worry, all of these points are given in the study material. So if you want, you can just alongside keep referring to study material also. Okay, or if you want to make the short notes, it's always better. Now, what do you have in this second indicator? Here again, let's pick up those two parties, A Limited and B Limited. What do they have? Again, they have a term of 5 years. Now, at the inception of lease, when you read the lease agreement, what do you find? B Limited has an option. Option means if B wants, B can exercise that option. What is the option available to B? At the end of lease term, B can buy the car. Ownership will not get transferred automatically. See, in indicator number 1, ownership will get transferred automatically after 5 years. In this situation, we are not saying ownership will get transferred. B can buy the car at a nominal value after 5 years, not today, after 5 years. But this option is available to B to buy at a nominal value, not at market value. So in this case, once again, let's try to assess. For a period of 5 years, who is enjoying the benefits? B. After 5 years, B will, in most of the cases, buy the car because it's available at a nominal value and continue to enjoy the risks and rewards. So that's why, what do you call this as? Finance lease. It's an indicator of finance lease. Right? Clear on this? Everyone?
Yes, sir.
Any questions so far? Akila is clear. Very good. Sridhar is clear. Any questions so far? No? Sure? Very good. Then Lakshmi is also clear. Very good. So let's move on to the third indicator. See, the asset, the lease asset is of specialized nature, which only lessee can use. Now, what do you have? A Limited and B Limited. They have entered into a lease arrangement. But the nature of asset is such. So who is the owner? A is the owner of the asset. But the nature of this asset is such. Only B can use that. Nobody else can use that. For example, locomotives. Now, if those are not usable by anybody else, who will use that? Obviously, B Limited only. Yes or no? Throughout the useful life of that asset? Yes or no? Yeah?
Yes, sir.
So therefore, what will happen? This will again be a indicator of finance lease. Clear? Next. Next indicator. See, the leased term substantially covers economic life of the asset. Lease term is clear to everyone, right? Economic life of the asset. Can somebody explain what is economic life of the asset?
Sir, life of an asset which are utilized for the future economic benefits and as well as present we can use this, so that is called as economic life of asset.
Okay, anyone else? What is economic life of the asset? Quickly. What is economic life of the asset?
Sir, the estimated life is to be profitable.
Okay, so there's a concept you would have covered under PPE, useful life. Yes or no? You remember under AS10 you would have covered useful life. Everyone, quickly. What is the useful life? Can somebody explain what is useful life?
Useful life are those life of the asset which can say that ki during that particular period we can say ki these assets are useful in the day-to-day business terms or as well as other arrangements of business.
Okay. Anyone else? Who will explain this? Useful life. Quickly, huh?
The period is over the expected available life.
Okay. So let's try to understand. Say a car. A Limited is the owner. Now, what is the plan of A Limited? A Limited wants to use this car for 5 years. This is what you call as useful life. Means the period over which A expects to use the car. This is also called as expected useful life. Yes or no? Now, for a car, can we say that the car is only usable for 5 years? Tell me. Can we say that the car is only usable for 5 years? Akhila says no. So we can say that a car is usable for 10 to 15 years. But A plans to use this only for 5 years. Does it mean car is usable only for 5? No. Car is usable. You can use it for 15 years, 10 years. Now this 10 or 15 years, what do you call it as? This is what you call as economic life. Okay, so there's a difference between economic life and useful life. Understood? What's the meaning of economic life and how is it different from useful life? Yeah, clear? Now, in this case, let's understand the indicator now. Now, what does this indicator requires? It says if the lease term, let's suppose lease term is 9 years, substantially covers economic life of the asset. Now, let's suppose economic life of the asset is 10 years. Now, whether this lease term substantially covers, now comes the question, sir, what is the meaning of substantially covers? What is substantial? Means, is it 80%, 90%, 95%, 70%? See, that is not defined by the standard. That is judgmental. That is judgmental. Generally, you will say anything more than 80 or 90% is substantial. But that is judgmental. One will have to take a judgment to decide what is substantial or not. For our purposes, what do we need to check? That if this lease period substantially covers the economic life. So what will happen? For a substantial period of time, who is getting the risk and reward? Lessee. Yes or no? Who is getting the risk and reward? Lessee. So that's why, what do you call that this asset, what do you call this arrangement as? Again, a finance lease. Right? So this again becomes the indicator of finance lease. Clear on this? Everyone? Any questions
Yes.
so far? Any questions so far? Quickly.
Sir, I have a doubt. Could you tell
Yes.
me that you said in a previous point, in that you say, which is indicator of that, how to identify the finance lease. My
Right.
point is, sir, that nominal value said कि we taken the nominal value for the after the agreement after the contract of the lease.
So can you
Then
tell me the indicator you are talking about? Which indicator you are talking about?
that's sir second number.
What is that indicator? Please explain. Huh?
The leasee has the option to purchase the asset at the end of
Okay.
the contract.
Okay. Now, okay, tell me. Yes. So what is your query here?
My query, sir, is that you says कि after the this contract period, which is in this case A to B, 5 years lease terms. After the completion of that period, you said कि B has a option to purchase the car from the A Limited.
Correct.
So how we can define the nominal value? You said कि it is a nominal value at
See,
least.
that will be specified in the contract itself. Okay. Both the
Okay.
parties today will agree what is going to be the market value, expected market value after 5 years. Okay. And they may decide that whatever will be the market value, let's suppose B will get an option of to purchase the asset at 50% of the market value. It may not be decided today. They will principally agree that whatever is going to be the market value, B will get a right to buy this at 50% of the market value, 10% of the market value. So that's how they can decide this. So it's not
Okay.
necessary to put down the
It will
value
depend on the
always.
market, how these assets are valued at that time after the completion of
Yeah,
the
but
contract.
that doesn't matter for us. Okay, so we don't need to get into the market valuation. We don't need to check what is the market value. We just need to check whether B has this option or not. That's
Okay, in the
okay.
contract.
Of course, all of these things we are talking about happens to be the lease arrangement only. Yeah? So everything you'll have to check the lease arrangement. Clear?
Yes, sir, clear, sir.
Sure. Any more questions? No? All right. So what we can do now is, I think we can take a break. Okay, so we can take a break now. So let's continue after the break, right? Yeah. All right. So IT, we can take a break now. IT, can we continue? Sure. All right, so we were discussing about the indicators. So let's continue on the indicators. Now, next indicator. Fifth one. Now, in this case, we need to make the usage of MLPs. So it says, if the present value of MLPs, now what is MLP? Minimum lease payment. Remember minimum lease payment we just discussed? If this substantially covers, once again, this substantially covers fair value of the asset. Okay, so a couple of terms now we need to understand. What is the fair value? Very simply, you can say fair value is the market value. Okay, let's try to keep it simple. That's the fair value. Aditya, I'll come to your query. Okay. And as regards this present value of minimum lease payment, what does it mean? Let's suppose lessee is required to pay, let's suppose, okay, 1 lakh each year. Let's suppose that's the arrangement, right? 1 lakh, 1 lakh, once again 1 lakh, 1 lakh. Let's suppose this is the arrangement. 1 lakh is required to be paid each year by the lessee to the lessor. Now, these are the future payments, correct? All of these are what? Future payments. At the end of first year, second year, third year, fourth year, fifth year. And we are standing on day 0. So what do? We compute the present value of all of these payments as on today. So compute the present value of 1 lakh as on today. Compute the present value of this 1 lakh as on today. Again for this, again for this, again for this. Now, this calculation, of course, we will do slightly later. As of now, please get into the calculation. I'm just hoping you understand the concept of present value. Now, let's suppose the present value comes out to 3 lakhs. Now, please, again, don't get into the number. It's an assumption. Let's suppose this present value comes out to 3 lakhs. Let's suppose you have done the calculation and the present value comes out to 3 lakhs. So now what do we need to check? Whether this present value of minimum lease payments substantially covers, means substantially is equivalent to fair value of the asset. Let's suppose fair value of the asset is 3.25 lakhs. Now here again we have a similar problem. What is substantial is not defined by the standard. It's judgmental. Okay, similar to what we discussed earlier. Now whether it's 80%, 90%, okay, 99%, we don't know. So that's judgmental. That's something we'll have to decide. But over here, what do we need to check? We need to check the present value of MLPs, first of all, and compare it with the fair value of the asset. So if that is substantially covering that, there again, what do you say? It's a finance lease, right? So these are 5 indicators that we discussed. Now, do we have only these indicators? No, there are few more, right? So let's quickly touch upon the other indicators as well. Now, what are those other indicators? So let's go through those indicators. If the lessee can cancel the lease, who can cancel the lease? Lessee. Means the lessee has a right, he can cancel the lease. And in such a case, losses of lesser. If let's suppose due to the cancellation of the lease, lesser suffers any losses, any loss is there on the part of whom? Lesser. Why? Due to cancellation. So who will bear that? Lessee will bear that. If let's suppose that is the situation, there again, what do you call such lease as? Finance lease. Next, if gains or losses from fluctuation in residual value of the lease asset accrue to the lessor. What does it mean? Let's suppose residual value is changing, okay, and which is resulting in a gain or a loss. So who will get the gain? Who will bear the loss due to that fluctuation in residual value? Again, it's the lessee. So in such a case, what do you call it as? It's a finance lease. Third, if the lessee has a right, what is the right? He can continue to, he can ask the lessor to continue the lease. Let's suppose initially the lease period was 5 years. Now lease term is over. At that point of time, lessee has a right. What is the right? He can ask the lessor to extend the lease. Lessor will have to do that for another 3 years, for example. Okay, he can continue the lease for a secondary period at a rent which is substantially lower than market rent. So this again is an indicator of finance lease. Understood? See, all of these indicators that we have discussed, you can say are certain situations. When do you check them? Now this is very, very important. Generally there's a confusion on this point. At the time of inception of lease, you need to check that. Now you may have a question, but sir, what if the lease terms are changed later on? So that you will discuss later on. Initially, you will check whether it's a finance lease or operating lease on the basis of these indicators. See, for your purposes in the exam, you will not go beyond these indicators. So don't worry about it. Yeah, so you will not have a situation wherein the indicator, as we discussed, is something which is beyond what we just covered, right? So you will be limited within these indicators only, but you need to remember the underlying concept. What is the underlying concept? Substantially all the risk and reward should get transferred. In most of the cases, you will have this information in the question itself. Clear? Clear? Everyone? So now, before we move on to the accounting requirement, which we now need to do, any questions, any doubts if you have, please let me know. Yes, over to you. Any questions, any doubts if you have, please let me know.
Hello, sir.
Yes.
I have one doubt.
Right.
In page number 5.143.
In lease number 5.143, what do you mean by that?
5.5 indicators of finance lease in that diagram. It says three parameters.
So again, please don't refer the page. We have discussed all the concepts. Please tell me the indicator and ask the query. So let's try to get into the concept, not onto the page number. Okay, so don't try to mug it up. Okay.
No, sir, I'm not mugging it up, but I need clarifications.
Sure.
You explained the suggestive conditions. That is that additional three indicators, which is also is a finance lease.
Correct.
But in this diagram, it says even if all the conditions are met, it does not necessarily imply that it is a finance lease. That's why I'm confused, sir.
So
if
that's
these
what
all
you need to
indicate.
Yeah, sure. So let me just explain this to you. See, there is one thing we have been discussing. What is that? That all of these are indicators. It's not an exhaustive list. Okay, yes or no? Now, what do you mean by that? That there can always be certain situations which are beyond these indicators, which you may have to consider to decide whether the lease is a finance lease or not. That's what you mean by that. Okay, so this is clarifying. that if you read anywhere and if you find that, okay, these indicators are there, and you stop thinking that whether it's a finance lease or not, you just say that it's an indicator. So that's why I'll call it as a finance lease. Is that the case? Answer is no. Why? Because the underlying concept is not the indicator. Underlying concept is what? Substantially risk and reward should get transferred. So that's the point. Okay. But as I told you, for your purposes in the exam, you will not be going beyond that. But it's not only the exam that you need to consider. You also need to consider that in terms of practical application. How do you apply this accounting standard? So that's where you need to have this thought process. Okay.
No, sir. Now also I'm not understood. These additional three indicators will be the finance lease or operating lease, sir.
So for your purposes, you can keep it very simple. There are 8 indicators we have discussed, right?
Yes, sir.
So if let's suppose in the question you have any of these indicators specified, or let's suppose the question says risk and rewards have been substantially transferred, so you will consider that as a finance lease. Understood?
Yes, sir.
Yeah. So that's how you need to look at it. Clear?
Yes, sir. But that additional 3 points, sir.
So that's what I'm telling you, that 5 plus 3 is 8 indicators. So 5 plus 3, additional 3 is what? 5 plus 3. Understood now?
Yes, sir. But that 5 plus 3 all are indicating that this is a finance lease only, not an operating lease.
Correct. So what's the question?
In that point only I'm confused, sir. Even if all the conditions are met, it does not necessarily imply that it is a finance lease. That point only I'm confused.
Okay, so let's understand this once again. When do you call a lease as a finance lease? Tell me.
If the lease stands for ownership of the asset.
So when did we discuss that the lease transfers the ownership? We did discuss that. So tell me, when do you call a lease as a finance lease? What is the criteria for that? What is the criteria?
At the end of the period, the ownership is transferred to.
Again, you are wrong. So are you listening to all the concepts we have been discussing? So can you see the screen right now?
Yes, sir.
Is the screen visible? So there's a concept we discussed. If you look at this, what is the concept?
Transfer of risk and rewards.
So when do you call a lease as finance lease? Now tell
it's
me.
A transfer of risk and rewards to lessee.
To lessee. So that means every time you have to check a lease, whether it's a finance lease or not, what will you do? You will check this, correct?
Yes.
Now
yes,
comes the question that how do I check that? Okay, how do I find out whether the risk and reward have been transferred or not? To help you on this point, certain examples are given. Okay.
Yes,
now all those indicators are what? They are nothing but examples. So let's suppose you are asking a question and I have given you 8 examples. And I'm telling you that please understand these are only examples. There can be various other situations. Okay. So what does it mean? That let's suppose if I have explained 8 examples and I say that there can be various other examples, in which case it can be a finance lease. What does it mean? It means we are only looking at some examples. So that is what is written over there, that all of these indicators are what? They are only examples of the concept. What is the concept? Transfer of risk and reward substantially. You can always have some more situations, in which case a lease can be a finance lease. But if you look at the standard has only given you 8 situations. Now, how will you find out what are those other situations? So that's where the standard is saying, look at this concept every time. Okay, on the basis of this concept, you need to find out. That's the point. Now, clear?
Okay, sir. Yes, yes, sir. Yes, sir.
Sure. Yes. Anyone else? Yes. Anyone else?
It means, sir, this is as an
So what do you
example.
mean by it means?
This is the example are given as an indicator of the to identify the finance lease type, right, sir? It means
No.
it is
Again,
only
please give
we
me
can.
the background of when you say it means. What do you mean by it means? Can you hear me? Yes. Anyone else? Any more questions on this? Aditya, I understand you had a query?
Sir, I have one doubt, sir.
Yes.
Sir, I asked that the provision of lease, sir.
See,
Provision and
your
conclusion.
voice is not clear.
Provision of lease and the conclusion of lease. How to write in exam, sir?
No, what do you mean by provision of lease?
The provision means what lease lesser comes in exams. How to write each questions are guessed in case scenario based like that.
No, I can't hear you. Your voice is not clear. So try to be a bit louder and clearer.
In accounting standards, if the questions are given, we can write the fact of the provisions, fact of the lease, and then provisions, how to write provisions at conclusion. But what should we remember? What should we read for the provisions
Understood.
of lease?
Right. So don't worry. For that purpose, what we will do is we'll look at some questions also. Okay. From the study material itself. So we'll get an understanding as to how to present that in the exam in terms of the solution. Okay. Just to give you the perspective. See, every time if you have to analyze something, so what do? First of all, you should give the guidance which is there as per the accounting standard. Let's suppose if you were to evaluate a given situation, whether it's a finance lease or not, what will you do? First of all, you will explain the situation with the help of the guidance. Okay, on the basis of any of the indicators. So once you explain that, that is when you will give the conclusion. Now, as regards your question, how to write the provision. See, the provision is something, for example, it's an indicator. Let's suppose it's a situation wherein the ownership is getting transferred at the end of the lease term. So you'll have to explain that this is what the accounting standard requires as an indicator. This is an indicator of transfer of substantial risk and reward, basis which we are making the conclusion it's a finance lease. Okay, so that's how you'll have to present it. And I would suggest in terms of doing that, it's always better for you to write it. So you write it. So that's how you practice it. Okay. So once we are through with the session, so what should you do? You should revise some of these things. And when you revise that, you should try to attempt that on your own in writing. So that's the best way to go about it. Okay. And always to look into the past years, question papers, RTPs, all of these material will give you a complete guidance. Huh? Okay. And that should be good enough. Clear?
Okay, sir.
Sure. Anyone else? Yes, Nisha?
Sir, fifth point.
Fifth point. Okay. What is that fifth point? And what is your query?
मतलब सर उसमें क्या विशेष प्रकृति है?
Nisha, I can't hear you.
हेलो.
Yes.
मतलब सर उसमें बढ़ते रहा ये बिना किसी मतलब क्या संशोधन के बिना
Nisha, I
मतलब
can't hear you. Your voice is not clear.
Sir, can you explain one more time?
This fifth point?
Yeah.
Yeah, sure. See, in this fifth point, there are a couple of things. First, if you are confused about the calculation, means you don't have the clarity, how do we compute this? Then don't worry. Because when we will pick up questions, all of these calculations we will do. So that's the first point. The second point is around the concept. Now, what does this concept requires? It requires you to calculate two things. All the minimum lease payments which you have, in our example, what did we do? We picked up the minimum lease payments. Let's suppose these were annual payments of 1 lakh at the end of each year. You will calculate present value of that. Let's suppose that amount comes out to 3 lakhs. Now again, don't get into the calculation. Only for example, I have kept it as 3 lakh. Let's suppose you have done the discounting and the present value comes out to 3 lakhs. Now this present value of minimum lease payments needs to be compared with fair value of the asset. Okay, now in this case, if you compare this 3 lakh with 3.25 lakhs, can you tell me what proportion will this become? Can you compute this and help me with the amount, Nisha? So what is the proportion of 3 against 3.25? What percentage is that? Quickly. Yes, Nisha, waiting for your response.
Yes, sir.
What percentage is this? Quickly, huh? Fast.
0.925.
No, I'm asking about the percentage. Are you saying it is 0.9%?
Yeah.
How is that possible? Huh? If you divide 3 by 3.25, how can this be 0.92%? Can you calculate the percentage? Who will calculate this? Great. Anil, Dhanlakshmi, they have shared this. They are saying it's 92.3%. Okay. Now, in this case, the question arises that what do you call as substantial? That's not defined. Okay. So that is judgmental. That you'll have to assess what is substantial for the purposes of considering this as a finance lease. Okay?
Yes, sir.
Sure.
मैं 100 को इंटू करना भूल गई थी.
Sorry?
Yes, sir, समझ आ गया.
Okay, very good. Yes. Anyone else? Any more questions on this? Yes. Anyone else? I can see some queries coming from. See, your chat at times becomes difficult to be tracked. So if there is anything I missed out on, please let me know. I can see this query from Akhil, I guess. She's writing indicators are examples to finance leases. It may be, yeah, so that's the point we discussed, actually. Okay. Yes, Sridhar, what is it you want to understand on point number 4? Tell me quickly. Yes, Sridhar, what do you want to discuss here?
Sir, repeat again point number 4. It little bit difficult to understand, sir.
Sorry?
It little bit difficult to understand, sir, point number 4.
Okay, no worries. So lease term, you know what is lease term?
Lease period, sir.
Lease period, correct. Lease period, lease term, it's one and the same thing. You know that? What is lease period?
Yes, sir.
Okay, very good. Let's suppose economic life of the lease asset is 10 years. Okay. And the lease term is 9 years. Now in this case, can you tell me the proportion of lease term over this economic life? Can you calculate this? Let me know what percentage it becomes. Tell me. Quickly, huh? Sridhar, what percentage is this? Sridhar, you're there, not there? What percentage is this?
90%, sir.
90%. So now comes the question that this 90% is substantial or not. That's a judgment you'll have to take. Okay, which in most of the cases will be yes. So that's why you will call it as a finance lease.
Understand, sir. Thank you, sir.
Sure. Yes, anyone else? Any more questions? Any more questions? No? Sure? All right. So now, as a next step, what we will do is, we will move on to the accounting requirements. Right? Now, see, considering the time that we have, so what I'll do is I'll pick up operating leases first of all. There are two types of leases we discussed, finance lease and operating lease, correct? So what we will do now is we will discuss the accounting requirement in case of operating leases. Okay. What is an operating lease? Can you tell me? What is an operating lease?
Which is not a finance lease, is an operating lease.
Very good. So it's very simple. You assess. If you find out that the lease is not a finance lease, so what do you call it as? You will call it as operating lease. The other point is that it's a lease wherein the risk and rewards are substantially not transferred to the lessee. So that's the way to look at it. Correct? Now, in case of an operating lease, next comes the question, how do you record it? Correct? So there are two parties, lessor and lessee. Who will record this? Both the parties will have to record this because they have entered into a contract. So that's why what will happen? Both the parties will have to do the accounting. Can we say only lessee will do the accounting? Only lessor will do the accounting? No. Both of them will have to do the accounting. So that's why what we will do now is we will look at the accounting treatment in the books of both lessor as well as lessee. Okay. So now in the books of lessee, in the books of lessor, what will happen? Say there's a lease arrangement for car, once again for a period of say 4 years. Each year 1 lakh is required to be paid by lessee to lessor. Let's suppose this is the arrangement. Each year 1 lakh is required to be paid by lessee to lessor. Okay. So what is the lease payment? 1 lakh at the end of each year. Let's suppose we have done the assessment on day 0 and we found out this lease is an operating lease. So it's done. It's an operating lease. Correct? Now comes the point that how will the lessee record this? How will the lessor record this? Okay. So let's look at the lessee first of all. On day 0, will there be any accounting entry on the part of lessee? No. Will there be any accounting entry on the part of lessor? No. Okay. So on day 0, they will not record anything. You may be thinking, but sir, there is a contract. Yes. They have done the assessment, but they will not do the accounting on day 0. So when do they record this? At the end of year 1. So at the end of year 1, what will happen? If you look at it from lessee's perspective, lessee is required to pay lease amount to the lessor. Yes or no? So lessee will record it as an expense. Lessee will say lease expense debit 1 lakh to lessor if this is not yet paid, or bank if that is already paid 1 lakh. And this lease expense will go to P&L. How will lessor record this? For lessor, it's an income. For lessor, it's an income. So what will lessor do? Either the lessor would have received this amount. So lessor may say bank debit or lessee debit if it is a receivable, 1 lakh. 2, lease income, 1 lakh. The same set of accounting entries will be passed by lessor and lessee at the end of each year. Year 1 end, they will pass this. Year 2 end, again same thing. Year 3 end, again same thing. Year 4 end, again same thing. So a very simple accounting treatment is there when it comes to operating leases, both in the books of lessor as well as lessee. So now what we can do is, we can pick up one example to discuss this. But before that, if you have any questions, any doubts around this, please let me know. Yes, over to you. Any questions if you have, please let me know. Tell me. Anyone? Any questions?
Sir, can I say कि for the leasing, it is as a financing activity, as a point of view just to see
No,
the lease?
no. It's not a finance lease. It's not a financing activity again. See, you can call it as a financing activity in case of a finance lease, not in
Finance.
case of an operating lease, because it's not a financing activity.
Okay,
It's
just I
like,
want to
yes,
check
yes,
the
please.
point of view. I
Sorry?
just want to check the point of view of lazy. So,
Yes.
in that point of view, I says कि it is a financing activity, not an point of view of a laser.
No, so I'm saying that whether you look at it from the point of view of lessor or lessee, for both, to say it's a kind of financing activity would be inappropriate.
Okay, sir.
Because there is no financing going on. So what is lessee doing here? Lessee has taken a car on rent and paying the rental for that. So if let's suppose you take something on rent and pay the rent, will you say it's a financing activity? Tell me.
No, sir.
No. So that's why I'm saying in case of an operating lease, there is no financing activity involved. But yes, you may always consider that in case of finance lease for both lessor as well as lessee. Okay.
Okay, sir.
So if
Understood.
you look at it from the perspective of lessee, you will not say that same perspective will not apply to lessor. Right? Same perspective will apply to both. Why? Because both the parties are there in this arrangement. So something which will become a financing activity for lessee will always be a financing activity for lessor. And that's something you'll have in case of finance lease, not in case of operating lease. So we'll talk about it as to why that will be considered to be a kind of financing arrangement. Okay. That
Okay,
of
sir.
course we will pick up
Yes, sir.
once
Yes.
we get on to that accounting requirement. Yeah.
Yes,
Anyone
sir.
else? Any more questions on this? I would request everyone to please stay on mute and ask the questions if you have queries. Sorry? Yeah, so I think that's the problem. Huh? Everyone please stay on mute.
Sir, this monogram mic is on.
Surinder,
Sir, monogram mic.
Manogar.
Yes, sir. Yes.
All right. Anyone? Any questions now? Any questions if you have? No? Sure? Okay, so let's look at one question now. So I'll just take you to the study material, okay? So let's look at this. Right?
Sir, I have one query. Like,
yes.
Hello, I'm audible, sir.
Yes, you're audible.
Is there any chance that finance lease might slowly get converted into operating lease, like with the fulfilling all the conditions?
See, one point you need to
that might.
Yes, so I have understood your query. Yeah? So let's try to understand the way you will analyze. Assessment of lease, whether it's a finance lease or operating lease. When do you do that? At the time of inception of lease. So you're not doing that on a daily basis. Once that is done, it's done. You will have to reassess that if there is any change in the contract.
Okay.
Okay. So in such a situation, when you say that, sir, will it keep changing? The answer is no. If the contract is signed, the clauses are there, you have analyzed it, how can it change? So at the inception, you will analyze whatever you have analyzed will continue to remain same till the time contract is over or till the time contract is not modified. Clear?
Okay, sir. Yeah, sir. Thank you.
Sure. So let's look at one example now. Suppose outputs from a machine taken on a 3-year operating lease are estimated as 10,000 units in year 1, 20,000 units in year 2, 50,000 units in year 3. So that's the output. The agreed annual lease payments are 25,000, 45,000, 50,000 respectively. Okay. What is the total lease payment? So if you take the total of these 3 years, what will happen? What does it become? 45,000 plus 25,000 plus 50,000. It becomes 1,20,000. Right? So that's the total. Now, in this case, there's one more consideration, and that is what you call as escalation. Sometimes what may happen is each year, the lease rent that we pay or the lease rent that we receive as the lessor, that may be increasing year on year. In the example that we discussed, the rent amount was constant, 1 lakh each year. What if that amount is increasing each year? In that case, what do? You will take the total and you will take the average of that. And you will equalize that over a period of 4 years. So let's go back. Let's suppose in this example, if we change the facts slightly, let's suppose in the first year rent is 1 lakh, second year is 1.5, third year is 2, fifth year 2.5, sorry, first year, second year, third year, fourth year, fifth year. Fifth year it is 3 lakhs. So each year, what has happened? Rent is increasing by 50,000. So in this case, what should you do? You should take the total of these 5 years and average it out. So can you tell me the average amount you will get if you do that for 5 years? Can you calculate this for me? What is going to be the average? What is going to be the average in this case if you do that?
Sir, 2.66.
2.6.
2.66.
2.66. Okay, Ankita says 2 lakhs, then Lakshmi says 2 lakhs. I think you need to revisit your calculation. The average amount comes out to 2 lakhs. It's simple, huh? Okay. Now, in this case, what will you do? Standard says, if you look at the books of lessee, at the end of first year, lessee will record an expense, lease expense debit, 2 lakhs. Lessee will not record 1 lakh. Why? Because there is an escalation, so he will average out. He is equalizing this amount over a period of 5 years. And this equalized amount will be recorded each year. So he will debit expense by 2 lakhs. But what is the amount of payment he will make? 1 lakh. Because at the end of first year, he is paying only 1 lakh. So where will the differential go? That will go to an account called as lease equalization reserve, 1 lakh. Okay. Second year, what will happen? Year 2, again the same thing. Lease expense debit 2 lakhs. Now what is going to be the bank payment? Can you tell me? Second year, 1.5 lakhs. And now once again you will have a lease equalization reserve. That is what? 0.5 lakhs. Okay. So now over a period of 2 years, what is the lease equalization reserve? 1 lakh plus 0.5. So all in all, collectively, we have a reserve of 1.5 lakhs. Third year, what is the accounting entry you will pass? Lease expense debit 2 lakhs. Now the bank payment is what? 2 lakhs. So do you have any lease equalization reserve? No. Now let's move on to fourth year. Now what is the lease expense you will record? 2 lakhs. But in the fourth year, what is the payment you are required to make? 2.5 lakhs. So you will say to bank 2.5 lakhs. Now where will this differential go? The lease equalization reserve that you created will now be debited. So this lease equalization reserve you will debit by 0.5 lakhs. Okay. So this you will debit by 0.5 lakhs. Fifth year, once again, the same set of accounting entries you will pass, but with a different amount. Lease expense debit. Again, you will record the expense by 2 lakhs. Now the bank payment is what? 3 lakhs. So where will the differential go? Tell me. Where will the differential go? Everyone.
Equalization account.
Equalization reserve account.
Lease equalization reserve. Debit 1 lakh. So thereby what will happen? The balance of lease equalization reserve over the period of the lease will become 0. Okay. So in case you have escalations in the lease amount like this, so you will have to equalize the amount and then record as an expense. You will not follow the cash basis of accounting. That's how you'll have to accrue this. Everyone clear? Everyone clear on this?
Yes, sir.
Any questions? Any questions? Now, similar accounting will be required to be done by the lessor. Now, in this case, if let's suppose lessee is doing this accounting, so how will the lessor record this? Lessor will record this on a mirror basis. So lessor will say bank debit 1 lakh, correct? To lease income 2 lakhs. Lessor will also record the equalized amount. And where will the differential go? Lease equalization reserve debit 1 lakh. So this is how lessor will be recording. Okay. And the same set of accounting entries. Mirror will be passed by lessor corresponding to what the lessee is doing each year. Everyone clear on this? Yeah?
Yes, sir.
Everyone? Yeah? Okay, sure. So with this, we can just conclude our discussion. Okay, but we are not through with this accounting standard. There are a lot of aspects we need to cover, which we'll cover tomorrow. But please make sure that before we meet next, you revise this part, because some part of this we will be requiring tomorrow as well, right? So now, any questions, any doubts that you may have, we can discuss that before we close this. Yes, over to you. Any questions? Okay, Aditya is clear. Surinder is clear. Very good. So then I think we can just close this if you don't have any questions. So IT, we can close this now.
सर
Yes.
सर वो लिक्विड लीज रिजर्व वो बैलेंस शीट में रिजर्व एंड सरप्लस में शो होगा क्या फिर at the end of
Yes,
the year?
yes. So it will be a separate line item, you can say, wherein you will park this. So it's more of a parking account, right?
It means it's a temporary account, sir, right?
Yeah, of course, because over a period of time, this will get squared off. So if you go back to that example, over a period of time, what has happened? That balance has become zero.
Yes, sir. We cancelled out.
Yeah, of course. See, this has to become zero. Why are you creating this? Because you are not going by the payments. You are going by the equalized amount. So that's why you have that.
Yes, sir. Clear, sir. Understood.
Sure. Okay. All right. So thanks everyone once again for your time today and for this wonderful participation. Let's meet tomorrow and continue with this discussion.
सर
Yes.
सर टेलीग्राम लिंक मिल सकता है क्या? टेलीग्राम और व्हाट्सएप लिंक.
So I couldn't understand what do you mean by that.
टेलीग्राम और व्हाट्सएप लिंक नहीं मिला है मुझे जुड़ने के लिए.
I'm not sure about this link. Maybe you'll it's better you reach out to the BOS team. Okay. So I think they will be able to help you on this. I'm not sure about this link as to what is that link, but you can always feel free to reach out to them. They will be able to provide that.
सर आप आईटी टीम को कह दो ना, वो हर बार शेयर कर देते हैं.
IT, if you can just look at this. So there's some link I think some of the students have not received. Can you please share that? Okay, no worries. So please ask them. I will also request them to provide this. Okay, so I'll also request the team, concerned team, to share that. Okay, whatever is that, that will be shared. Don't worry. Yeah.
Okay, sir.
Sure. Thanks.